Ready? In this workshop, we're going to be discussing angel investment. What's the best strategy to invest in startups? And then we're going to dive deeper into fundamentals of finding the right startup. There are many ways you could invest your money in real estate, in financial markets, in stocks. You could invest your money in currencies, and the list goes on. Angel investment is investing in small companies, small startups that have the potential to grow over a couple of years in an exponential manner. So how do you benefit from this? Are you going to get dividends from this company? No, you're not. Usually startups do not pay their investors from the revenue they generate. But the way an angel investor makes their money is by investing at a low valuation. So when the startup is at a very young phase, and then selling at a higher valuation, maybe 10 times the valuation, 20 times the valuation, or even more. Now, there are three ways to exit your investment, and then we're going to go back to basics. But just for you to understand that you're investing in startups so that you could exit at some point. Does that mean that you're going to exit in a month, in a year? Probably not. So you're going to have to wait on your investment. So you have to realize that whenever you're depositing money, be it $10,000, $20,000, $50,000, or $100,000, you're putting that money for a couple of years in the future. You're not putting that money to basically flip it in a month. It does not happen this way in angel investment. There are three ways for you to actually make your money or exit. If the company goes public, so if the company decides to go on the stock market and sell its shares, then if you are holding shares in this startup, you get to sell them to the public. There are examples like Meta, like Facebook, where investors put in $150,000 and went out with $1 billion. This does not happen every day, of course. The second way you could exit is if the company gets sold. The competitor or the bigger player will buy all the shares or most of the shares. And you get the option to sell those shares during the transaction. You have to have this included in your agreement with the startup. Most of the angel investors I've met do not pay attention to the agreements they do. And as a financial lawyer, I've worked with many venture capital, many angel investors, many players in the ecosystem. And I can tell you, 80% of people do not pay attention to these agreements. You should include a clause that stipulates if the company was to be sold, you would exit with the company. The third way you could make your money is if you are selling your shares to another angel investor or to another player in the ecosystem. Keep growing and joining groups of angel investors and talking about your investments so that potentially you would attract some buyers to your shares in that startup and you could exit at some point. There's a fourth way, but I wouldn't really bet on it. The startup paying some kind of dividend or some kind of return to its investors. This does not happen, but if it were to happen, then potentially you could make some kind of dividend on your investment. So let's go back to basics. You are investing in companies. What do you need to do? You need to first understand how a company functions, understand that a company has to have a business model, a revenue model, a team organizing that business, a legal framework for the business to actually function, a market, a target market, and most importantly, when you are an angel investor, you have to understand the concept of scalability. So if someone was to propose any kind of startup to you, the main criteria that you need to focus on is how scalable is this? Is this company able to sell its products all around the world, or is this company only going to sell in a specific market? I've always looked at startups from a scalability perspective. And what I can tell you is that very few are the ones that are really scalable. I want you to read the content that you have below this video on scalability. For this introduction, I want you to understand what is angel investment, what is a startup. I laid down what is the structure of a startup and what's the template pitch that you need to receive whenever you're investing in a startup. I laid down the things I look at specifically when I'm investing in startups. And finally, I added a small guide on scalability. In the following lectures, we're going to dive deeper into the fundamentals. But for now, I want you to read that content and see you in the next video.